Welcome everyone to iPicture Trading's class, and I'm going to explain some things here as we move along. We're currently in a position, but we're going to add to that position, and I'll explain why here. Hold on one moment. Go, and we're going to put a target at 8 ticks. 5 ticks, 47, 48 quarter, and then we're going to put one at 8 ticks, and we're going to move our stop here to 44. 44 quarter, there we go. Okay, sorry about that, to bring you in and throw you under the bus like that, but let me explain to you what we're doing for the new ones joining the class. Our process is a 1, 2, 3 process, and a fourth requirement if you want an additional confirmation. Everywhere where I'm drawing a blue circle, and it has nothing to do with referring a specific point on the chart, I'm just drawing it so you can understand what I'm trying to refer to, is known as the macro picture, the big picture in the market. So we look at this collectively. If the big picture tells us we're at a point in the market that is an interesting point, or a point where we feel that the market is going to make a move, so to speak, each one of those blue circles that I've just drawn is the big picture. Now these cans down here, these visual animation cans, is the current time frame. So the current time frame So I apologize for that. We're going to try that one more time. Current time frame. And let's see if I could get that in your view. There we go. Just that. Very good. Okay, we were paid on the first target over there on our transaction, but I'll get to that in a minute. I'm more interested in having you understand our process here. Go. And I'm going to get rid of these blue circles now because they're not necessary. So you understand currently where I had all the blue circles, that is representation of the macro picture of the market, the macro picture. So we consider every one of those blue circles the big picture of the market, and this big picture down here is the current time frame. And what is it the current time frame of? The day. The current time frame of the day the current time frame of the week. Here's day. Here's week. Here's month. Here's year. And all it's doing is measuring from high price to low price, open price and close price. This up here, and I got the arrow there, so, is this can here. The current arrows is representation of this down here. Every one of these blue arrows up here is this down here. But what I'm predominantly interested in, we just got paid on the third target. What I'm predominantly interested in is using the second bar in, which is the past. And what we want to know is where's the current bar in relationship to the past. Got a lot of yellow orders coming in there at 52.75. They're really bidding this thing up. And the reason why we do that is if the best metaphor I could give you is if I had you on an airplane and you've never been on an airplane before, and I asked you to stare out the window and tell me how fast we were going, you would not be able to articulate that information to me or tell me that information because you have no contrast. You have nothing to contrast the speed. There's no trees, there's no cars, there's no, unless it was another airplane, and even that, it would have to be a slower airplane or a quicker airplane in order for you to have something to contrast it against. So what I'm simply doing with this yellow line here and this yellow line here on each of these top charts is measuring the time frame before's high and low price, and what I'm doing is using this white line to tell me where I am in relationship to that high price and that low price. So you can tell whether you're getting a deal or not. And what we're looking for is primarily 3 locations. I'm going to measure that for you on the first chart here, and then we'll work from right to left. I'm interested in the 60% off sale, or the 40% off sale, or the 100% off sale. So currently, the market is just about 5% above 60% off of yesterday's price, high to low. At one point today, we were better than 100% off sale. But currently, this white line is in between the 60% off sale and the 40% off sale of yesterday. If I look at the weekly, last week's high to low, you can clearly see that you're getting better than 100% off sale of last week. We've already gone past a 60% off sale and a 40% off sale. There's the 40 of last week, there's the 60, there's the low of last week, and here's the current price. So you could see that you're getting a really, really smoking deal on the weekly time frame. As we look at the monthly, you're getting 100% off sale. So not only are you getting a 60% off sale of last month's high to low, it's giving you 100% off sale of last month. current price is synonymous with last month's low right now. There was 60% off of last month. There was 40% off last month. And since the current price is down here, and actually just slightly below the low of last month, it's offering you a bargain. If we look at the yearly time frame, this was last year's high. Currently, the price is synonymous with last year's high price. So when you break through that high price, that's known as breaking resistance, and then resistance becomes support because you had enough energy to penetrate through the high price, and now you're revisiting that high price, which theoretically then becomes support. And so as I worked through the scenario here, you could see we're getting a bargain up here. If we look at the current time frames, now that's this bar on each of these charts up top. If we look at the current time frame and not look at the past, you're looking for the same thing. If you get a 40% off sale or a 60% off sale in the current time frame, we're interested in that area. So what are we looking for? We're looking for, in step 2, under the micro time frame, agreement. This is measuring the S&P, the top one. This one here is measuring the NASDAQ. The third one's measuring the Russell 2000, and the last one's measuring the Dow Jones. And we're looking for agreement in all 4 of those markets, which we currently have. They're all green and heading up. And that's known as the micro time frame. Over here, in the last time frame, which is a 1-minute time frame, we're looking for these lines, or what I refer to as triggers, the small triggers and the large triggers. We're looking for green. So if you have an agreement here on the micro, and then you have agreement on the micro, because you're getting a deal up here, or here, or here, or the year, or the current can, visual animation can, or the week, or the month, or the year. If you're at any area that you feel you're getting a deal, you proceed to step 2. You look for agreement, and then step 3, you look for the triggers to be green and heading up, and then we use this time and sales window. And in time and sales, we're looking for simply a yellow order coming through, and I'll explain that sometime later. And that's the reason why I got into that trade. We're currently up $231 on the last contract, and we made quite a bit of money on the first 2 sets of transactions. And so there is a basic understanding of what we're looking at. I'm going to pause this video because we can't make them terribly too long. So I will see you on the next training. Thank you, and I hope that you learned something from this episode. Thank you.